positive day, positive close today, Kubi, which at least bucks the trend of recent sessions. Your views?
Yeah, hello Lerato. Yes, this is the first day that we haven't seen a decline in about 10. We've seen 10 consecutive sessions, and that's about the worst we've had in a row since 2009. So it's a bit of a relief. At least trades were quite active today, and we've finally seen maybe a stopping of the trend. The bears have probably ended their run for now. At least that's what we're hoping.
Well, I mean, factors that have been at play, obviously wait and see approach ahead of the results season, and there's also a feeling that investors are holding back, wanting the elections done and dusted. Will those be variables going forward into the next few weeks?
Yes, that's the analyst's view. Generally, those are the two things that people think are happening. There's some cash, there's an element of cash raising, so people aren't going into shares. If anything, they're going out. And then on the institutional side, even though the macros for the economy look okay, it looks like we're going to have a stable election, but there's still a bit of nervousness on the international side because of the things that have been happening across Africa. So we believe that that's probably led to what we've seen on the stock exchange for the past 2 weeks.
Nervousness on the international side raises the question, where are the local institutional investors? What informs their decisions?
Well, the local institutional investors got a bit hurt. 2009, the international investors got hurt. We got hurt locally as well. So since then, there's been a bit of a tempering. Some move into bonds and fixed income. There's been some shift from the equity market into the fixed income market. At the same time, you can do shorter tenor deposits and you can do treasury bills. So that has led to some dilution in the interest we've seen in the stock market in earlier years.
Talk to us about the debt market and the bond market. The Debt Management Office said to be wanting to issue about 60 billion naira in 3- and 5-year federal government bonds this week. Issuances this year seem a lot less than what they were in 2010, but it's still early days, do you think?
Well, it's actually 60 billion and it's next week. Half of that, 30 of that is in the 5-year, 30 of that is in the 3-year, and the 3-year is new. The 5-year is a reopening of a previous series. Yes, we have seen a bit less of the bonds, maybe over the past few months, but then there's been increased activity on the treasury bill side, and investors have been very interested in those. We've had pretty good yields for the 3 months, 91 days, 182 days, and 1 year have had pretty good yields. And today there was actually an auction today, secondary market and primary market, in excess of 200 billion combined for the two, and we think we're going to see a lot of interest there as well.
Talk to us about AMCON, Kubi, and this is also issues around delays in launching some of their consideration bonds, for instance, and the role that AMCON's meant to be playing. Are we being a little bit too critical of AMCON at this stage?
Well, we haven't had too much criticism. The managing director, the AMCON executives have been in the news quite a lot, just trying to reassure people that everything is on course. They've had a bit of delays on the documentation side for the first set of bonds, the ones that came out at the end of the year. Well, that was December 31st. So I think they need to tidy up the issues around those before they can go into the second tranche and before we can start trading those bonds in the market. So that's what's been happening. But they've been keeping us updated, which is a good thing, because at least there's been information around it. It hasn't been like a blackout. We've been hearing regularly that, look, we're still on course. We might be a week or two behind, but everything's going pretty much according to what they've planned.